Okay, now that we've covered trading styles, you're probably asking, well, what kind of style might fit you? Well, at this point in time, that's hard to tell because it depends on your propensity to risk and so on and so forth. And we're not going to get into that right at this point. Later on in the charting section, that's when you'll begin to understand the different types of styles: swing trading, position trading, day trading, intermediate and long-term investing, and be able to understand which style you prefer. But in the meantime, we have to look at the overall process. And let's face it, the first thing in the process when you're looking to invest in stocks or trade, you've got to learn how to pick a stock. And in the process of picking a stock, there are basically two types of analysis. One is fundamental and the other is technical. And both are very different, but both are very important. Let me try to explain. We talked about what a market is at the very top level. Let's look at an auction, for example. I'm sure that many of you have been to an auction barn where they're selling all kinds of things, including antiques. Well, a fundamentalist, and when looking at an auction, let's say an oak desk comes up for sale. Well, from a fundamental perspective, they want to know who made this desk. Is it made of solid oak? Because if it is, that's different than veneer. That adds value. Is it made of cherry? Is it made of walnut? Walnut is a very rare wood and going to carry value for a long time. Do I care about what happened a week ago, whether a desk come up for sale for $100, very similar to this one, or $200? No. I want to know, because I understand antiques, I want to know fundamentally what this desk is made of, who made it, and how well it's made. So in other words, a fundamental analysis is about the company. It's right? Am I with you so far? Are you with me so far? There are basically two types of stock analysis. And that, as you know, is at the very beginning of the process. You can't invest in stocks, or you shouldn't, until you've done some analysis. There are two types of analysis: fundamental and technical analysis. Both are very different and both are very important. Fundamental analysis deals with the company and focuses on the company. Technical analysis is all about the stock and not about the company. It's important, as I said, to know both. And let's take an auction, as we talked about earlier. The market makers of a farmer's auction are very similar to a basic stock exchange. There are people there with the auctioneer trying to create, advertise, get people interested and come to the auction to buy and sell products. Okay, so I'm sure all of you have been to an auction. Let's assume that an old antique desk comes up for sale. Well, a fundamentalist wants to know, what's it made of? Is the desk made of oak? Is it made of cheap veneer? Is it truly an antique, 25 or more years old, or is it made recently? Is it made of cherry? Oh, is it made of walnut? Walnut's a very rare wood, and we all know, at least some people that collect antiques know that an antique made of walnut is rare and very expensive. So even though the price recently may vary in antiques, over the long haul, when you're looking at value, which is what a fundamentalist does, you look at the value of the item, or in the case of stocks, you focus on the company. Fundamentalists delve into who manages the company. They delve into the financial reports. The three in particular are the cash flow statement, the balance sheet, and the income statement. Now we're going to get into that a little more detail later on. But it's important to understand the two different methodologies when it comes to analyzing stocks. Now, getting back to the auction, a technician wants to know how many people are at this auction. How many people are bidding for this antique desk? That's very important to him. Why? Because the more people bidding on that desk, in all probability, the higher the price will go. To a fundamentalist, again, they don't care. As a matter of fact, there's nothing they like better than getting in and buying value when nobody else sees it. Because ultimately, sooner or later, people are going to see value and they're going to buy it and the price is going to go up. So to a long-term investor, fundamental analysis is absolutely essential. Otherwise, you're just throwing a dart at a board. You have to understand who owns the company. Is it owned by the smart money, by the top institutional investors? And why do you want to know that? Well, you want to know what portions owned by institutional investors. You want to invest in a company where 30%, only 30% of the company is owned by smart institutional investors? I don't. You know why? Because if this company starts to go off track, then the board of directors basically has no recourse. They let the CEO, the chairman of the board, they have full reign and they can drive the company right into the ground. However, if 70% or greater in particular of the company's shares, outstanding shares, are owned by institutional investors, then they have control of the board. They have people sitting on the board and they can tell the CEO, the chairman of the board, look, this CEO is incompetent. We need to get rid of him, fire him, and find somebody else. Fundamental analysis, very, very important. So let me recap. Fundamental stock analysis is about the company. It delves into the financial reports of the company, namely the cash flow, the balance sheet, the income statement. Determines how much is the business worth, and as well as, is it making money? What type of goods and services are being provided by this company? And is it being managed by a competent management team? Also, who controls the company? Because if I'm going to put in a whole bunch of my money, being an analyst or a hedge fund manager, into this company, I want to know who controls it. Because if 70% of the outstanding shares are owned and controlled by the founder, then I got a bit of a problem with that. Because I don't have any recourse in the event, again, that the CEO drives it, or founder or co-founder drives the company into the ground. So very important, and we're going to teach you how to do that. For people that plan on position trading, but more importantly, intermediate and long-term trading, we highly recommend do not purchase stock in companies where institutional investors don't hold at least 60 to 65% of the outstanding shares.